Calling to order the Lake County Investment Advisory Committee, the 29th day of January, 2026, in Commissioners' Chambers. Roll call.
I would like to call Commissioner McIntosh,
Present.
Commissioner Pleshnik,
Present.
and Treasurer Zurin here.
Excellent. Next item on the agenda is the election of officers. Do we have any nominations for president?
I nominate Commissioner John Pleshnik for president.
Any seconds?
I'll second.
Any discussion? All in favor say aye.
Aye.
Aye. It's unanimous.
I
Do
would
we
like-
have any nominations for vice president?
I would like to nominate Commissioner McIntosh for vice president.
Second. Any discussion? Hearing none. All in favor say aye.
Aye.
Aye. It's unanimous. Any nominations for secretary?
I nominate Treasurer Zern.
I second. Any discussion? Hearing none. All in favor say aye.
Aye.
Aye. It is unanimous. We have our officers set for the year. Next on the agenda is approval of the minutes for our meeting of October 30th, 2025. Do I have a motion to approve, waiving reading of the same?
Move to approve.
Second.
All in favor say aye.
Aye.
Aye. It's unanimous. Do we have any old business to discuss before the committee? Any old business? Hearing none, let's move to new business with our investment review.
Good morning, and thank you very much. Oh, Nina? I should be. Is it capturing it? Okay, can we try it again? Green light's on. Oh, there it
There we
goes.
go.
Yes, there's a little delay there. Sorry about that. Yes, so again, thank you for the opportunity to come out while we're having this break in the brutal winter weather to provide a quick update here on the county's investment portfolio. Before we get started, with that, I wanted to just provide a quick update on our firm, Meter Public Funds. We are one of the largest providers of this service to public entities throughout the country. We've been providing this service here for over 35 years and currently advise and manage over $165 billion of public fund dollars only to over 400 public entities throughout the country. Included here a list of our dedication to the Ohio market because we are Ohio-based, headquartered out of Dublin, Ohio. And we are always very honored to be serving the public sector, helping organizations like yourselves properly manage their investment portfolios and maximize the investment returns. So real quick, just moving into really what's happening in the marketplace. Starting out with a quick review of 2025 as we turn the page into 2026. We know in 2025, the Federal Reserve did lower interest rates 3 times from a top level of 4.5% to now a level of 3 3/4. Term interest rates followed suit. When we look at the 3-month Treasury bill, the 2-year Treasury, and the 5-year Treasury, each of those also declined. Those yields rather almost lockstep with the overnight rate. And this has been a function of really, initially in the year, there was a concern about inflation as it related to the impact of tariffs. That impact was rather negligible, which allowed the Federal Reserve to shift their focus to the labor market. Labor market showed considerable weakness in the latter part of 2025, and that allowed the Fed to lower those rates, as we said, in 2025, and also fed into the market, setting the stage for appropriate lower level of interest rates. Looking ahead to 2026 here, we have our Figge model where we know the Fed funds rate, inflation growth, and employment feed into the level of interest rates. The Fed has provided guidance for 2 rate cuts over the next 2 years, one in 2026 and one in 2027. Again, will be dependent on the data. as particularly, there's this continuing concern that the labor market may continue to remain soft, and as the higher levels of inflation from earlier in 25 roll off, the expectations are that inflation will continue to moderate. Growth, we know, has been very strong, economic growth in the second and third quarter, very strong economic growth. Expectations for the fourth quarter, depending on who you're talking to, is slow growth due to the government shutdown, versus the Federal Reserve Bank of Atlanta has a model where they're projecting what they believe the fourth quarter economic growth will be, and their model currently is showing potential economic growth for the fourth quarter of 5.4%. So that would, of course, be very strong growth for the U.S. economy coming out of the post-COVID days. Job growth, of course, has been very slow. When we look at the average job growth in 2024, it averaged around 170,000 jobs per month. In 2025, that average job growth dropped to around 50,000 per month, and much of that softness was occurred during the fourth quarter. So clearly, when we do receive, hopefully, the labor market update next Friday, assuming that the government does not shut down, we'll get a clearer picture, really, on, was this an anomaly or is this a trend going forward? And yields, of course, as we mentioned, have dropped. We now have the 2-year Treasury as our benchmark security, and we can see it's dropped 150 basis points, but still remains above the average for the past 20 years. Mentioned that the Fed is saying lowering interest rates twice, 26 and 27 by 0.25. Markets expecting, though, those 2 rate cuts actually to occur in 2026, with the ultimate terminal rate being around that 3% level. And we can see that by looking at the Fed funds futures market here as it relates to each of the dates. The Fed did wrap up their meeting here yesterday for the January meeting, and they did not make any changes to rates. So I know we're a little compressed here on time. So with that, I'll just move into the portfolio review. So at the end of 2025, cash was $133 million. When I say cash, that means those are funds that are invested in overnight investment options. So those funds are invested, but they have immediate liquidity, and then the securities portion of $263 million, total portfolio of $400 million. I just want to note that, the heavy weighting to cash, and then particularly to the, when we look at the maturity distribution where we have $125 million maturing in the next 12 months, is intentional from the standpoint of we know that some of these dollars will be used to cover the project costs related to the Safety Service Center once above and beyond the amounts that were borrowed from the notes and the bonds as well. So currently, the investment portfolio is relatively short, as I said, with an average maturity of 1.42 years. Securities that we're invested in are all permissible under Ohio Revised Code and the county's investment policy. The weighted average yield of 3.77% is up from, if we look back a year ago, it was at 3.70%. In the fourth quarter, we did have $42 million that was reinvested. That was split between earlier in the quarter between some short-term investments to maintain those available funds, and then also locking in some funds out in that 3-year area. Again, recognizing that if the Fed is going to be lowering rates and rates are going to stay pretty range bound, we would say it does make sense to lock in some of these rates longer term. From our standpoint, when we look at the yields on those buckets, we can see that the securities maturing beyond 2 years are all yielding over 4%. So this is indicative of where we have locked in those rates previously before rates really started to fall. So, Mike, I know you wanted to add a few comments there.
Yes, thank you, Eileen. First of all, I just wanted to publicly thank you and Meter for all the knowledge and advice and expertise to help us manage our portfolio. And I did want to just point out that based on the projections, especially with our discussions on the Federal Reserve members, and they have seemed to come together on their projections over the next 3 years on where rates are going to be headed, even with the I would say, small arguments over inflation and unemployment. Those are the two big factors, but they all seem to be on the same page now that rates are going to be going down. They're projecting at least two more rate cuts over the next 2 years. So we have taken our investment philosophy. Instead of short term, we're looking at the 3-year bucket, but we are considering the amount of debt that we're going to be paying down over the next 12 months. So there will be some short-term investment, but most of it will be geared towards the 3-year bucket to protect the investment return for the county portfolio. And I just wanted to explain that and also thank Eileen for her working with us and giving us all the information to make proper decisions.
Well, thank you. And I would just like to add, it's the collaboration between myself and Treasurer Zern and his staff, which really, makes this a big success for the county.
Thank you. Any further new business? Hearing none, I would entertain a motion to adjourn.
Move to adjourn.
Second.
All in favor?
Aye.
Aye.